Welcome to Table Talk, where there's always room at the table. I am your host, Jonathan Harmon of the J Harmon Home Team, and we can't wait to talk to these fine guests. Enjoy the show. Cool with you. Okay, awesome. Hey, good afternoon, everybody. Welcome to Tuesday. My name is Jonathan Harmon. I'm with the J Harmon Home Team of Keller Williams. And I've got three awesome guests sitting here with me, and I can't wait to talk with you guys. Before we get started, like we were talking about, we are going to hear from my guy, Bryan Nale. Hi, Bryan.
And John.
Did you just call me John? We've talked about this.
I know about that.
And Bryan's new role at Primis Mortgage, and that happens to be who we've got sitting here with us, by the way. So Chris Blevins, right, with the National Sales Director for Primis Mortgage.
Correct.
And, of course, Belinda Arender. I almost said, I don't even know what I was about to say, but it wasn't Arender.
Okay. So anyway. I've kind of embraced, like a lot of people call me Arender. So Belinda Arender, the mortgage lender.
Belinda Arender. That's hard. That's harder to say.
I know, right?
Also with Primis, and you guys have made this big transition. We're going to talk a lot about that. But before we do that, we want to hear from Bryan. Bryan is a proud supporter of Table Talk and also of all things Spread the Positive. So, Trent.
Hey, my name is Bryan Nale. I'm a mortgage loan officer with Primis Bank Mortgage, and I want to tell you that I absolutely love being a member of the Spread the Positive Network. It's such a great mission, and it helps bring so much positivity to our community. It's a true pleasure to be part of. There are a lot of ways to navigate financing a home. And in markets like this, having the advice of a trusted local professional is key to making sure you get the right advice for your specific circumstances. Whether you're interested in the purchase of a new home, second home, or have a need for a refinance, I'd love to earn your trust. If I can help you nail your mortgage, call me at 615-243-3976 or visit nailyourmortgage.com, and I'll be happy to talk with you.
Primis Mortgage is a subsidiary of Primis Bank, a member FDIC, equal housing opportunity. As always, all loans are subject to approval. Primis Mortgage, NMLS 1894879.
So I dig the new music. It's kind of got like this Daft Punk feel to it. So I'm bringing in some glow sticks for the next one.
That sounds awesome.
Yeah, it's gonna be fantastic. But anyway, so big news. You guys made a change. You know, it's been kind of an interesting journey the last 16 months or so, and I feel like you guys have found a home with Primis Bank Mortgage. Is it Primis Bank Mortgage or Primis Mortgage?
Primis Mortgage.
Okay, gotcha. Primis Mortgage, and it's spelled Primis.
Yes. Yep.
Got it.
Yeah. Fun fact: it means first in Latin.
There you go. First. Okay.
First
I
in
like
everything.
Got it. So walk me through the story here, Bryan, Belinda. The as the great philosopher Jerry Garcia once said, "What a long, strange trip it's been." How did you get here?
Well, a long, strange journey. So between, our company was merged, and between the two companies, I'd been there 14 years.
Mm-hmm.
Bryan had been with us a little bit over 5 years, but he had a previous longevity with the merger the first time.
Yeah.
So with that, when we completed that merger, right after that, they announced an acquisition.
By an even bigger bank.
Yes,
much
correct. And with that, we thought, if we're going to have to make another change, why don't we do it on our terms this time?
Mm-hmm.
So that's when, we tried to wait it out and see if it was going to work, but it just became obvious that, what, it's probably time for a change. And I hate change. I'm a creature of habit. I mean, ask Chris, we've had lunch 3 times today at the same restaurant. Not lying. Okay. So
That's a true story.
I hate change, but it was just time.
Yeah. Well, and Primis is new to the market.
Yep.
So is this the first one in Tennessee, Middle Tennessee?
No, we've actually had a few people here, in the marketplace. Now, Primis actually is new from a standpoint of Primis bought the previous mortgage company, which was called C Trust Mortgage.
Mm-hmm.
So Primis is only with the transaction on that took place in June. So, but we've had some people in the market already. So there was, I think, 5 or 6, loan officers and the manager and stuff in the marketplace already. So we're combining and joining as a team force.
So my ignorance here, when you say in the market already, what do you consider the market?
Sure. Nashville proper, so to speak. The Nashville
So Nashville
area.
and the counties that touch it?
Correct.
Got it. Okay. Great. Because I'd never heard of it. That
Right.
doesn't mean anything. I'm just little old me here in Rutherford County, but okay. And why Primis? I mean, good gracious, Belinda, there's bazillions of options out there.
I will tell you, I probably interviewed 40 different companies because again, I hate change, and I did not want to make a change where 90 days from now I have to change again because it was a mistake. I wanted to make sure I researched it, that, it was everything that they told me it was going to be. Probably the biggest thing with how we chose was the leadership team.
Mm-hmm.
Our CEO that's over the mortgage division actually founded Ameritrust and then sold it as a Fortune 500 company. Our director of operations ran Goldman Sachs. Our director of credit was over Wells Fargo. Our secondary guy helped formed MaxX, which is a huge aggregator where we actually sold to them at our previous company. And then of course we got this guy that, ran the central US for a huge mortgage broker. So their leadership team was just stellar. I mean, and their leadership team, not only did they have all of this tremendous experience behind them, they also had the origination background, because there's one thing to have mortgage experience. There's another thing to have that experience of actually being in the market and being in the trenches and knowing what it's like to originate mortgages.
Mm-hmm.
So that part I loved.
Yeah. So a stellar pedigree to come together and kind of do your own thing. Now, how big is Primis?
Primis Bank. So Primis Mortgage is backed by Primis Bank. So Primis Bank is about 3.8 billion assets, publicly traded bank out of Richmond, Virginia.
Mm-hmm.
And then the mortgage division, we're about $1 billion today, as we sit today. Growing, obviously a small company that we're looking to expand into and utilizing the bank relationships, obviously. And again, the expertise of growing it nationally is where we're looking to go. And so, ultimately we're going to continue to grow, but we want to hire, the right team, the right person. And we're not under the gun to be, to go out there and grow, to be, the biggest, the best, beat our chest, right, and everything else. We want to do it the right way, keeping culture, right? You know what I mean? Keeping the right, rates, obviously being a very competitive market and everything else in line. So
give me some perspective. So $3-ish billion in assets in the bank, held, and about $1 billion or so in loan origination. I'm assuming that's over the last year, annually, I guess is what I'm trying to say. So perspective, I mean, how does that compare to somebody else here in this market? And then maybe like you said, one of the big guys, right, the national ones.
It's going to be very similar to when we came in with Iberia. As far as our numbers, it's going to be very similar in size, as for not the bank side, but the mortgage production. And I think that was probably one of the things, in addition to the leadership, that was so attractive, is that because we are such a large team, we have a big voice. And that makes a difference. They listen
when you
to
say
us.
Your team.
My branch. We have the ability to say, this is what we need. And it makes a difference to them because they're not so big that we're just another number. They're not so big that I can call and say, hey, this is what I need. And they're not saying, now tell me who you are again. They're like, oh,
yeah,
okay.
We're branch 714.
Yeah,
or
we're
whatever.
branch 7697.
Yeah.
I mean, we're big enough that we're big enough to have everything that your national lenders have, but we're small enough that we can personalize it. We can create stuff and we can move fast. We can close loans fast. If we need to pick up a new investor, we're not having to go through 17 layers of command. We actually, our department, our person who's over secondary can pick up that new investor for us.
Mm-hmm. Now, Bryan, you were telling me when this was shaken out that there were some really cool tools that you were able to utilize that you'd not had before, even with the branch or the bank that you guys were with previously that was considerably larger, right? So what are some of those tools that'll make your job easier to better serve your clients?
Well, I mean, I'll just start with we have an app that's as basic as that. But through that app, the power that comes with that is that if I'm out coming back from Rotary, or if I'm heading towards a Chamber of Commerce meeting, and
He's a Rotarian, by the way.
and I don't have my my computer right there, right handy, I can pull up any file that I have in process, and I can check on what the pre-qualification number is. I can set some parameters in there so that the realtor that they're working with, if they want to adjust that pre-qualification number down, they can do that. So if I say, hey, this person's approved for a mortgage at $400,000, and you say, well, hey, Brian, I need to get an updated pre-qualification there because they're going to write an offer for $375. And you don't have to wait for me to get that to you. Now you can, within that app, you can make that change yourself and generate.
As long as it meets those parameters. So it speeds the process on my side of things.
That's right. That's right. There's also through that app, we send videos at every stage of what we call a milestone. So when the loan is keyed in, they get a video saying, hey, congratulations on starting the process. And then once they have a house and we've got the conditional approval for them, they're going to get another video that's going to say, hey, your loan has been conditionally approved. Congratulations. This means that the underwriter has reviewed the file and everything looks good. There's going to be a couple of things that we're going to ask you for. Here's what you can do in the meantime. And it just goes into some of the things like, don't open up a new credit card account, or don't apply for credit. Don't run your balances up on your credit cards. Don't lose your job.
Don't finance your appliances.
Don't quit your job. Just things that consumers need to hear. But to me, it's that client experience that they're getting this. And these videos are personalized so that they've got like their names included in them. It's very, the details are all there. And that's what I love about it, is the details. They're considered and taken and run with.
That's awesome. Man, I just lost the question. It was right here. Did you not see it?
I missed it.
Oh, I know. You mentioned one of the most dreaded words in this whole entire industry, and that is the underwriter. The underwriter.
The underwriter. It
Dun,
instills
dun, dun.
fear. May go with that as that for Halloween.
Yeah. That'd be awesome. Yep. So, one of the things that I've experienced over the years in real estate is that you can have a stellar loan officer, you can have a great contract, you can have two agents that are working together, a good negotiation, a clean negotiation, but a competitive one. Everybody feels great about it. And then all of a sudden the underwriter is like, oh, well, we need this. And you're like, what? You need a what? I don't even know what that is, and that brings out the worst in me always, because one of my pet peeves is, well, I've been doing this for however long. Usually that justifies bad behavior. Right. But I tend to say that sometimes when the underwriter wants some crazy random junk. And to me, some of the best lending that's gone on is when there is an underwriter says that they need something, but there's an extenuating circumstance that makes that not possible. But it doesn't mean it's a bad loan. And the loan officer can go to bat for the borrower and go back to that specific underwriter, not some nebulous underwriting director that's over here, and not that, but can go to them and say, hey, let's look at this again. Here's why I don't really necessarily agree with what you're asking for. How does Primis manage that?
I think maybe, Chris, you can speak to some of the overlays or lack thereof. But I think at the end of the day, if you have a loan officer who knows their guidelines and knows what we're talking about, we should anticipate all of those things that might come up.
Sure.
Now, hey, if something slips through the cracks, that's what you're speaking to, is how do we work within the scope that we have with our underwriters to interpret the guidelines in the way that works for the client.
Can you call an underwriter?
Yes.
Directly?
Yeah, I can call them. I can email them directly.
You know them by name?
Yes. And I can talk to them before the file even gets to a contract stage. So if I say, hey, my spidey senses are going up on this, is it going to be an issue?
Mm-hmm.
I can call an underwriter who is going to have that file and talk to them and say, will you bless this?
There's not like a central underwriting hub somewhere that's got 25,000 people in one room. And
I haven't heard that, Chris. Do we have that?
We do not. We do not.
We don't have that.
No. We have direct access.
Good.
And I'll just chime in on that, is say that, certainly to Brian's point, a good application, right? A good loan officer that's taking a good application, certainly that's where it all begins.
Sure.
Right? You know what I mean? Everything else. But I would tell you that we've built this company. And again, to Belinda's point earlier, is, we all have origination experience. We've all been loan officers. We've all been, sitting in that chair and everything else. And it's a tough job. It's a really tough job to do a lot of business and be a high producer and everything else, as you know. So we look at it as, hey, again, the communication piece is direct. We want the loan officers to have direct communication. Our underwriters understand that, we're in the business to close loans, right? You know what I mean? We're in the business to get loans through the system and everything else. The underwriters that you're probably speaking of a lot is these feel good conditions is what I like to call them, that you're just not needed. So that's again where we're small, we're nimble, we're able to, to underwrite the file based off of what we call the findings, the DU findings and everything else, and expedite the loan through the process without a lot of the red tape or a lot of the, feel good conditions and stuff like that. And again, and if there is something that we have or something pops up, Bryan has the opportunity. He can go straight to the underwriter and speak to the underwriter, and maybe they disagree, right? You know what I mean? Or whatever the case is, then he can escalate that as well to the manager same day, right? You know what I mean? At the same time, it's not a underwriter sitting behind the walls or behind in a box that you can't go touch and feel.
Right.
So
I've wanted to touch a few underwriters.
We all have.
Touching and hitting are different.
Well, I mean, it's touch.
And we've all been there, right? You know what I mean? Is the frustration and everything else. And at the end of the day, we want the client experience to be awesome. And the client could be, right, you as the real estate agent, the referral partnership. My client may be Bryan, right? And Belinda's my client, so to speak. I mean, but the client at the end of the day, the person buying that house, the agents involved, everything else. I mean, we want to have a good experience on that piece of it. And again, I mean, a lot of the big box companies that are out there today, that's where they've lost that vision, right? They've kind of got so big and they forget about the people.
100% agree.
And this industry is always,
and I'd say that's probably
opinion,
what prompted the move.
Yeah, I would tell you that there's a big lack of the customer focus with your bigger companies because it's transactional, and we don't want it to. Of course, each transaction's important, but there's a family behind that transaction. Sometimes there's multiple families.
Oftentimes,
so we've got to have a good experience for them. I mean, and home ownership is so very important from every aspect that you can possibly imagine. So we want to be able to give them that experience where, I read an article one time that said that buying a home was only came behind death as far as things that people feared. You shouldn't fear buying a home. It should be enjoyable. It should be a celebration of something you've accomplished.
Well, and I think that goes to, this is kind of my philosophy, is that it's not, yes, it's a transaction. Okay. I am purchasing something. There is a transaction to it, but it is so much more than that. And what's more to it than that is what everybody has as their concept of home, right? So when I walk through a house with a client, we're looking at a physical structure, but more than that, we're looking at where their kids are going to grow up. We're looking at where, at some point they're going to celebrate a graduation. At some point, they're going to mourn a death. At some point, they're going to retire, maybe at some point. I mean, on and on and on and on. And so that structure represents a life, not just a life lived, not just a transaction.
Exactly.
And gosh, so many people lose sight of that.
Yes.
Because they just want to get her done.
Right.
And that's fine. It's good to get her done.
Well, and we want to close it as fast as we can for you. But at the same time, we want to make it a really pleasant experience. We want it to be something that you look back on and say, I really did. It wasn't that bad. What do you mean? It was that you had a bad experience. Ours was not like that.
Or even Bryan made that easy. Or Belinda made that easy.
Yes.
Chris, did you make it? I don't know if you made it easy or not.
I hope I make their job easy.
Okay, that's perfect. All right. So next question, and this will be the last one that's directly related to Primis, unless I think of something else. And we'll talk market. But what are some things that Primis brings to the market that isn't already here? I'm sure you guys do VA. I'm sure you do FHA. I'm assuming you probably can do THDA still.
Yes.
A regular old conventional loan. But what are some things that Primis has that we don't already have?
Mm-hmm. Well, I can tell you from our experience of what we had before versus where we are now. We have enhanced credit scores, which means previously with FHA, we had to have a 640 credit score. Mm-hmm. Now we can go 580.
Mhm.
We also have lower credit score requirements on VA.
Mhm.
We also have the ability to do some niche products, which are your first time, well, I'm not first time home buyers, which are like your bank statement loans, your ITIN loans that we couldn't do before.
What's ITIN?
It's where a borrower doesn't have a social security number, they have a work number. They have it's not necessarily a social, it's like an identification number.
Okay.
So yeah, it's an enhanced product line.
So there are some portfolio stuff for some oddball situations. I told Bryan one time I had a client that his entire income was in quarters. He had all these coin op machines that he ran. And I mean, he made a ton of money, but it was all in quarters. And so, prove it. You know what I mean? I mean, literally bags and bags and bags of quarters. It was super weird. And the bank that we started with couldn't do it.
And I would say, I mean, just on top of that, I mean, so we also, with the bank backing side of our, of the mortgage company, we can obviously do one-time closes. So they have a construction product. We have a bank statement product internally, which is great because, again, to that point, you know what I mean? You have a cash flow, right? You know what I mean? You're doing your income through the banks. So we have that loan, that product. We have a medical program for doctors, medical professionals getting out, of college, right? You know what I mean? Starting a career.
I love that medical program too. It's not specific to MDs. There's other practices that are included that a lot of times are left out of somebody's.
Right.
They'll just call it an MD loan.
Right.
And ours is just medical professionals.
Right.
So it picks up other.
And that just makes sense. There's a fairly established market for what those people will make.
Right. Well, if you're I think dentist is in the list, right?
Right.
So if a dentist can't get a traditional MD loan through most lenders, but our medical professional loan, it encompasses dentists or
optometrists. You know what I mean? Yeah. So it's got some other professionals in the medical field, right? That's not just specific to the medical doctor field, and that's a lot of banks and some other mortgage products and stuff, differentiate that. So
yeah. And I think we just rolled out a program too for nurses, where with somebody that it encompasses all first responders.
Right.
So we'll pay for the appraisal with no knock to their pricing. A lot of times somebody may say, hey, we'll cover your appraisal, and then they'll just price it accordingly so that the bank catches that margin in points or their pricing, but we don't affect the pricing. We just take care of the appraisal.
Little switcheroo there. All right. So let's talk about the market for a second. You guys put your pontificating hats on. And we're going to absolutely hold you to everything that you say.
Awesome.
Well, this has been great.
So every answer is going to be, I'm not sure.
Yeah, exactly. So this year has been crazy. I mean, absolutely insane. There's been several moments of hurry up and wait. There's been several moments of people going, and just kind of pausing. The beginning of the year, especially, or I guess the beginning of the second quarter, a whole lot of pause happened. I'm assuming, making an assumption. If I'm wrong, please tell me. Refis have just almost. I mean, they're a necessary tool occasionally now, not something that somebody's seeking out.
Right.
For the most part. So how's the year going to end? Let's ask it that way. What's coming? What are we going to see? What are rates today? I don't even know what they are today. They've been all over the board. So where are we today? And what do you think is going to happen? And I know you have to say they're somewhere in the, I get all that. But
they're somewhere in the 7 range. Okay.
Fair enough.
But as far as projections, we're projected to continue to rise through first quarter of 2023.
So what do you think we're going to be in January?
That's the hard part, because if you look at January of this year, Mortgage Bankers Association, Fannie Mae, Freddie Mac, everyone said, we think we'll end up somewhere around 5 by December. We hit 5 way sooner than December. And here we are at 7. So there's not a way, and it's because we're such a global economy. Like last week, we saw really good improvements in rates because the Bank of Australia helped us out. Bank of England helped us out. Well, today, it's completely opposite of that. There's no way for me to sit here and say, here's where rates are going to be in 90 days, because everything affects mortgage rates these days, not just a 10-year treasury, not just the U.S. economy. I mean, it's global. Global affects us now. So if you said, where are we going to be? Projections are through the first quarter of 2023, we're rising rates. Where are we going to end up? Hard to say. I mean, how they're projecting, which again, some people say we're already in a recession. Fannie thinks we're going to go into a recession, and Fannie's the agency that backs our mortgages, conventional mortgages, thinks we're going to go in the first quarter of 2023. So who's right?
Well, and the only way to know when we went into a recession is to look backwards.
12 months from now, we'll be able to tell you. But
Yeah.
So that's the projection. They do expect that rates will start falling back down after that. But, who knows if that's right and how far are they going to fall? Do we think we'll see 2 again? No.
Yeah, I think that's long gone.
Yeah.
All right, so let's do it this way.
I'll chime in something there and maybe put a question back to you too. Is how have you seen the changes in interest rates that we've experienced this year affect the market in real estate? Are you seeing? Tell us a little bit about what you're seeing the market do in response to interest rates.
Sure. Chaos, volatility, right? People are still buying houses. Prices have not. And this is very difficult for people to see because of what they see in the short term. But if you compare the beginning of, or let's say the end of September this year to the end of September last year, prices are way up, right? And that's the entire Nashville MSA. Okay. But the anecdote is, but I keep seeing price reductions. There's price reductions all over the place. Yes, there are. Because last year we appreciated 31% in Rutherford County, and depending on where you were specifically in Davidson, higher than that in some parts of Davidson County. So 31%. We're not going to appreciate by the end of this year. We're not going to appreciate by 31% again. But if somebody lists a house and prices it in such a way that they're still following the rhythm of last year, then guess what's going to happen this year?
You're going to have to reduce
price reductions. Exactly. And how quickly you adapt to that by setting expectations determines whether or not that house is going to sell. But people are absolutely still buying houses.
I think it's opened things up for home buyers. They can go out there and they can look at 5 or 6 houses and say, none of these really did it for me. Let's go back out next weekend.
And that's exactly what's happening. So, days on market is stretching. It's still not insane. I started in 09. In 09, I had houses that had birthdays. Right. I mean, they just did, right? Because I had one client, I am not kidding. I saved every MLS sheet that I showed this one particular client, and we looked at 175 houses. You know why? Wow. Because there were 175 houses to look at.
Wow.
That's why. Wow. Yeah. So, will we get to that point again? I don't think so. But a great listing that's priced competitively, it still sells like that. If it's a mediocre listing and it's priced okay, then somebody's going to make an offer on it. It's going to be lower than the list price. Maybe they ask for some concessions. You guys were kind of talking about that a little bit off mic. I think it's just, I always like to compare it to sailing, right? So for the last 3 years, we were tacked in the wind. That sailboat was leaned over like this. Those sails were full. You were getting all kinds of stuff in your face, bugs in the teeth. I mean, it was crazy, right? And now it's like that wind has shifted a little bit and that sail's starting to kind of do this. The boat's a little more upright, but we're still moving.
Well, and you know what? I saw a video. I was talking to y'all about that today that said, you know what? This is a return to normal. I mean, we are normalizing again.
That's exactly what I tell people. We're not going backwards. We're normalizing.
Yeah.
The reality is selling a house in 6 hours is not normal.
Exactly.
Selling it for $50,000 above an already inflated list price is not normal.
Yes.
Right? Waiving inspections, waiving appraisal, waiving all these things. It's not normal.
Right. Well, now you have the ability that people are accepting FHA offers again.
And home sale contingencies.
Yes. So we are returning to normal.
That's it.
And in the scope of what we were talking about off mic, if you've got somebody who likes a house and maybe they like it at 400,000, but maybe they really like it or maybe they like it at 390, but they really like it at 400, which is where it was originally listed. If the seller is going to give them 10,000 and concessions that they can use to buy the rate down and get to where they want to be,
it puts everything back on the table.
And that's where I think working with people who understand that and understand that, hey, to the seller, they're going to net the same amount either way. Mm-hmm. It's going to help you more. $10,000 in purchase price is going to move your payment to here. But if you take $10,000 and you use that to buy the rate down or do a single premium mortgage insurance
or pay your closing costs,
well, that's going to help you get, have money in the bank after closing. But if you've got plenty of money because the house you sold is last year at the peak is doing got you set well, what you're really worried about is how much is your monthly payment.
Yeah, but I mean, like right now, your first time home buyer homes in Rutherford County are starting $325.
Yeah.
Right. And so I'm a first time home buyer. I come into the market. I've got $20K in the bank. I got to be really smart about how I spend that $20K.
Absolutely. Yeah.
And spending that $20K on an origination fee and closing cost. If I can get the seller to pay that,
Right.
and I can put that $20K on actual principal, that's a much smarter move for me.
Well, and think about it. If you go back less than 12 months ago, that same house, you had to pay $50,000 overpriced to even
Cash.
be considered for that
Cash.
deal,
Right.
to even consider to be the buyer.
And no way would you have done a FHA loan. No way would there'd have been 30 offers on it, and the winning one would have probably been a cash deal,
Yes.
most likely,
With no contingencies.
closing 10 days.
Yeah.
Yeah.
Absolutely.
Yeah. No, it, and I think this is where a little bit of experience and a little bit of seasoning helps, is understanding. Well, first of all, understanding that right now there is not a right answer, right? And anybody that says, I know exactly what to do, they're either lying or they're delusional, or both, right?
Right.
So that's number one. So number two is, let's come up with the best game plan with a plan B, a plan C, a plan D, right? And understand that a price reduction doesn't mean you're going backwards. It just doesn't. It just means you're not quite going forward as quickly as you would have last year, right? All right, so here we go. This is what we're going to do. We're recording this, okay? All right, so if everybody put $1 on it, okay, we're gonna have a betting pool. We're not actually putting a betting pool because that's probably illegal for you guys. But if we put $1 on it, tell me what rates are going to be on January 1st.
7.625.
Woo.
7.25.
I'll shoot the gap at 7.5.
I'm gonna be optimistic. I'm going just a touch under 7. I think something will happen and it'll come down just a little.
And it very well could. I mean, and that's what, getting back to the point that we're driven by such global indicators. That's what's so hard to predict is, I mean, who would have thought that Russia would have invaded Ukraine? And that affected rates.
Yeah.
So, I mean, there's the talk that COVID is going to have another run.
Mm-hmm.
So who knows? I mean, I would love for you to come back in January and say, you saw silly rates are 2 points lower than that. I'd be like, Thank you, Jesus.
Well, here's the thing. The crazy thing is it could be 7 on January 1st, and on January 8th, it could be 7
on January 1st at lunchtime. And by 5 o'clock, it could be 7.5. Okay.
We could all win.
Not kidding.
On the same day.
On the same day. Yes. It can. We had a day last week that, half point difference. Crazy, right?
That's crazy. And that particular piece right there is what makes our market on my side of things very challenging.
And that's what I was going to say. This is really, I mean, we're in a market right now that it's all about inflation, right? So, I mean, until the inflation talks calm down, then we're just going to see the rates continue to rise a little bit more and a little bit more and a little bit more. So everything's got to kind of end on the inflation piece of it. And to Belinda's point, I mean, the world markets are certainly dictators as well of the bond market and everything else. And so, if something major happens, obviously, in, Russia or Ukraine, right? You know what I mean? That definitely dictates how the bond market moves, which obviously dictates how the mortgage markets, react and do those kind of things. But what I would say today is, I mean, as long as you still see the inflation pieces, certainly the Fed continues to look at it as and it is pushing out there that inflation still needs to be tamed, if you will. Then we're definitely going to continue to see a rise, in that piece of it. And to Belinda's point, I mean, we're certainly in the high 6s, you know what I mean, the low 7 areas and stuff like that. And the markets are actually pushing back on high rates to that point. It does matter. So if a client does have some money and they want to pay some, to buy down a rate, it actually makes a difference in today's market. Whereas, 2 years ago, they could pay to point and the rate difference would be 1/8 or 1/4. It's not worth it, right? You know what I mean? Save your cash, put it down, use it for whatever else. In today's market, if you pay a point, it could actually, move your rate 3/8 of a point.
Right.
So you're talking about a rate market too, that to a first time home buyer that's buying that $300,000 home,
makes a big
certainly
difference.
It does. I mean, that rate is able to, make that money work for you.
Well, and I think that, again, that goes back to the conversation about an experienced loan officer that can look and go, okay, look, you've got this much of this finite resource. You've got this situation, and here's 3 options.
Right.
You know, well, what would you do? You know, and actually listen to what you would do and say, well, if this is more important to you, do this. If this is more important to you, do this. And I can make an intelligent decision about that.
Yeah.
Right.
That's the end of the day. We want to give the clients options and
Right.
and give them advice and then let them choose and make it happen for them.
Yep. All right. Last question. We are almost out of time. All right. This is my favorite one. You guys are all smarter than me. So you tell me, are we going to have a housing? Is it a bubble? Is it going to crash?
No.
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 If you look at the difference,
It's okay if you want to disagree. You
I
hesitated on that. No.
I was waiting to see what they said, but no.
if you look at the difference of where we are now versus 2008, the difference is equity. People have equity right now. The average house in America has 35% equity in it.
Crazy. isn't it?
In 2008, we were doing 100% loans, either in the form of a 100% loan or an 80-20. People didn't have equity.
Mhm.
That was the difference.
And sometimes 110 loans.
I've done
Not you
loans for a really
specifically.
long time, but
125.
I'm not going to lie. There was times I did 105.
Yeah.
So yeah. And I think that that's number one, a huge difference. But number two, I think that that's why you're not going to see the foreclosures that we saw then because people have equity. People foreclose when they don't have options.
Right.
When you've got, equity there, even if it's not as much as you wanted, you're going to sell that house and take that $20,000 or take that $30,000 versus letting the bank get that money.
All right. So devil's advocate.
Let's go.
The equity is not really real.
It's not really real unless you start seeing prices drop tremendously.
Mhm.
Because right now it's still real. Right now I can sell my house and make money. You can sell your house and make money. So as long as you don't go there and cut too many prices on us, we're going to make that your responsibility.
Right. That's fine. I got broad shoulders.
I would also say, we're not in the credit crisis that we were in 2008. People today are qualified, you know what I mean? So we're qualifying the clients a lot more, right? You're not having the stated income, stated assets.
You don't keep mirrors at your desk for them.
We
to fall.
don't, to fog up the window, get a loan, right? You know what I mean? Kind of thing that we've all heard and everything else. So people now, the credit standards and everything else are a lot more, they're not as risky, obviously, and everything else. And so the default ratios, the 30-day delinquencies, all of that stuff is much, much better. So we're in a much better, stronger economy and those kind of things than seeing what 2008 or the housing bubble. Certainly you will see certain markets across the country, have a bigger dip just because they had the bigger increase, right? Their balloon went up a lot faster because of
much more fun
things.
roller coaster.
Nashville's one of them, right? Everyone wanted to move to Nashville. Tennessee's a great market. Tennessee's a great state, that Nashville's a great market, I should say that, people wanted to be here. And so there was a lot of industries that moved here and everything else, but so you'll see a little bit of that decline, but again, it's not going to be to the point of,
Well, and, I saw, again, I like to read, I'm a nerd, but it said, what? The housing market has the ability to make or break the economy. In 2008, we broke the economy. In 2020 to 22, we made the economy.
Mhm.
right.
That's
So-
for sure. So what I said last question, and then I told you, unless I thought of something else, what breaks Nashville's housing market? Give me like an apocalyptic, what breaks Nashville's housing economy?
A state income tax.
Yeah, if people quit-
you asked me that question a couple of years ago, because I asked you, when does this rapid acceleration of prices stop? And you were like, you put it back on me and said, well, you tell me what would make it here, especially in Middle Tennessee, stop. If Nissan packed up and left, would Rutherford County stop? No, it'd still be growing. So, I really, truly, something would have to be a catalyst to make people want to not move here anymore. And a state income tax would do that. The last time somebody proposed
Because that's one of the big reasons people are moving here.
Yes.
and the last time we had anybody in elected office that proposed a state income tax, do you think they're getting reelected?
No. It was a bloodbath.
Yeah. So
Okay.
I agree
yeah.
completely. If people stop moving to Nashville, that's our problem. And that would be a huge reason people would stop moving here. But
Mm.
we're such a transit area that unless you give them a reason to quit coming, they're going to keep coming.
I agree. All right.
Yeah, I would say, the state, obviously the states that are really corporate friendly, they're bringing in corporations. And to your point, it boils back down to taxes and those kind of things. So if companies continue to bring corporations into the state and you're a corporate state, friendly state or whatever, then the demand's still going to keep up. I think at the end of the day, I think the bigger worry is that housing prices have to kind of start to peak. You know what I mean? At some point, and there's certain markets in the country that there's no ocean. You know what I mean? Kind of a thing.
Sure.
So you don't have the water piece of it to it. But on the flip side, people can't afford it. You know what I mean? And that's kind of when that housing, the prices are going up so fast that it's not, collectively keeping up with the income levels.
Very interesting point. And I think the most important thing to realize of what you just said is housing prices peak, but that doesn't mean that they immediately come down. Right. We will have a period of time where they're stable or stagnant or normal. Right. And don't forget that historically normal appreciation is 3 to 4%.
Right.
So I compare that to the moving sidewalk at the airport. Right. So if you've ever run down one of those moving sidewalks and you get to the end of it and you walk off of it, you feel like you hit a wall, but you're still moving forward. That's what that is starting to feel like.
Yep.
Right. But that's not backwards.
Right.
No.
No, you're still moving.
You're still moving.
Just much slower.
Yes.
And that's what I would say is just at the end of the day, I mean, real estate, to Belinda's point, I mean, we kept the industry, or kept the markets going and everything else. I mean, real estate always is a good value. You know what I mean?
Sure.
So buying a house is a good value, at 6.5, at 7.5, like you're still putting money. You still got to pay rent. You know what I mean?
Yep.
So you got to put out,
Gotta live
pay
somewhere.
money, to put a roof over your head. So,
When I started doing mortgages, they were double digits.
right.
Okay. And I used to, and then we hit 8 and we refinanced everybody. And the rule was 8 is great. 8 is great. And people used to say, when rates get in the 3s, call me. I'd be like, when the rates get in the 3s, I'll be too busy to call you.
Yeah.
Because I never thought they would hit that. And then they did. And then they hit the 2s. And I thought, what in the world?
I was waiting for y'all to pay me to take a mortgage.
I told somebody.
I really was. I was close.
And there was conversations about negative, negative.
I told somebody one time, I said, I told them that story that I never thought they'd get that low. I said, I keep waiting for us to come in and they say they're interest free, like your car, 60 months interest free. I kept waiting for the
5
interest.
years, same as cash.
Yeah, I kept waiting for the interest free mortgages because, the 2s were so far fetched. Why would I think that
Why
wouldn't
not,
happen?
right?
Exactly.
We got real close on 15 years.
We did. Yeah. I'm in the, I think I'm at like 1.9 or something like that on a 15 on my primary.
So do you want to refi?
Not a freaking chance. I don't want to sell. I don't want to do anything. Yeah.
I know we're low on time, but just psychologically think about that. You ask about, is there a bubble? If you've got a mortgage at 3% and you lose your job, you're going to do everything you can to keep your house over your head, especially when you look at what rates are now and how much rents are and what that's going to do to your family.
Talk about some steps backwards, right?
So a recession with a lot of job loss is a concern. But if even then you're going to, the old adage is real estate loans are so much lower than any other type of lending because it's the thing that people are always going to pay first. And if I'm sitting here with a family and I've lost my job, I'm going to do everything in my power to keep that house.
I'm selling a kid.
Or I'm going to
selling a kidney. Yeah.
And then if I can't keep it, I'm going to sell it.
That's it.
I'm not going to
because you have equity.
Me.
Right.
Yep.
Exactly. Man, it's been fun.
We should do it again.
Thanks for bringing him.
It was a surprise. Like he didn't know we were coming. So, I didn't want to make him nervous.
I'm doing this podcast thing or whatever. And I was like, all right, well, just take me back to the hotel.
Yeah. Hey, you might get a beer out of this though.
Yeah. Hey, I saw that when we pulled in. I was like, I'm looking forward to going in here.
Yeah. Outstanding. Well, thank you guys so much. So Belinda and Bryan with Primis Primis Mortgage, I apologize, right here in Murfreesboro. You guys are same level of service that you had, just with an even better company backing you. So that's awesome. And then if you do have an issue, you can call this guy and gripe about these two. So it works out.
Love it.
Yeah. Thank you guys so much for helping spread the positive. Trent, thank you as always. My hero over there, fellow bald guy. Love that guy. And if you have any mortgage needs, obviously call Bryan. Thank you for sponsoring the show. If you have any real estate needs, give me a shout. You just want to sit down and have a cup of coffee. Let's do that. That'd be a lot of fun. And if you want to help spread the positive, hit us up on that as well. You guys have a great rest of the week. We'll talk to you again real soon.